BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody and welcome back. I'm going to try and make this video short and sweet really, it's not a great deal to say about it. Just wanted to start the video by saying, obviously we're going down a little bit and that's fine. Traditional markets, not quite the same, but we're looking for a peak on the Dixie. I'll show you all that in a minute. But just before I start, I just wanted to put things into context for you here, right? You base this around a general market cycle for Bitcoin or for crypto in general, right? Or even the dollar, which is fulfilling its own market cycle, has a 4-year cycle, interestingly enough. So, think about this, right? You buy into anything, especially spot positions, buying stocks or anything really. We're not talking futures here. So, you buy into anything, you always got to think risk to reward. What's the risk? What's the reward? What's the time frame? How long am I going to stay in this? If it's a pension, you're going to stay in longer. If it's, I suppose if it's crypto, you stay in less. We recognize that there's a 4-year cycle for Bitcoin, and crypto generally follows that as a whole. So I wanted to let you know there was two main things that I've done in the last 2 market cycles, right? So my first major introduction into crypto, when I decided to actually just buy a lot of it and hold it just to see what happens, right? It's back in 2015. I'd had some Bitcoin in the past. It was doing okay, obviously. And I decided to venture into some of these altcoins, which seemed relatively new at the time, one of them being XRP. So I bought XRP at just less than 3 cents, right? Some point 2015, 16 or something like that. Anyway, I more or less bought the top, all right? More or less bought the top on that. And it was going down mostly, for the most part, almost all the time. And I'd put in a sizable chunk, not loads, but enough. Anyway, we're talking 2 years later, 100x. Right? Okay, fine. What was the what was going on here? Well, I bought an altcoin. I had to sit on it. I had to wait for the market cycle to complete, which at the time kind of wasn't really aware of. More of a gamble. And then it peaked massively. The only main component would be time. So obviously, XRP peaked around $3.50. I sold, about $2.80, and did pretty well out of that. But for the most part, time was the problem. Patience and time and hodl, right? Arguably, I hadn't paid any attention to the chart. I just bought it based on its fundamentals and the idea that crypto was an emerging thing, and this one sounded quite good, and it worked out in the end. Fast forward to the last market cycle, I was buying lots, I was trading lots at this point. Crypto was a bit more established. We had things like Binance that I was able to trade on with decent liquidity. So all of that, it was a game changer really. I didn't really have that as much as it wasn't available to the extent it was in the last market cycle. So I was doing a lot more trading, but one of the things I felt quite strongly about buying into it was Matic. If you remember Matic back in the olden days, it was not popular. People used to call it scam coin. I remember, what's he called? Crypto Chico, that guy? He made a video on it saying how it was a scam, and he'd gone on their GitHub and he was saying it's a Binance scam. There's nothing in here. There's nothing going on. There's no development. It's anyway, you wouldn't say that anymore, would you? And it worked out quite nicely. For the most part, Matic was up and down with a large range between 1 cent to 4 cents for the most part for a period of years, right? Serious ups, serious downs. Again, buying anywhere into that area though. But even if you bought 4 cents, you'd look back at that and being a hero. But at the time, you were buying the top, right? Anyway, 100x again, more than that. So there you go. So all the trades that I'd done the previous cycle and one before that probably didn't amount to the size of the gains that I made from those 100x's. Now I'm not saying that anything that I'll be buying this time around is going to do 100x. I haven't really seen anything that I feel that strongly about, nor would I expect 100x. But what I'm trying to put across to you here is that we are in a similar market cycle to this last one that's just been, and the one prior to that, but more so the previous one where the crypto market, altcoins were more established, exchanges were rife. So we're looking at something similar. Also, it's worth recognizing that the market cap of crypto has not completely crashed out of, down to new lows. It's still very high in compared to where it was. Trading volume is massive still. Looking at Bitcoin on a down day like today, it's trading at $1 billion, just on Binance. So there's plenty of money here. Obviously the spot ETFs and all this other nonsense that's coming out, it's real. That will have an effect later on down the line, and also just the general market cycle is going to complete most likely, as it always does. So what we're thinking about is smart money versus dumb money is what I'm trying to put across to you here, and hodling over trading. This is not really, and it hasn't been for ages now, a trader's market. Traditional markets have been way better for trading. Crypto has been dull and boring and sideways and uneventful, and really it's not untradeable, but it's traditional markets have been better. They've just been better, which leads me to just put across to you that dollar cost averaging into Bitcoin and crypto that you like, or whatever, for whatever reason, whether it's fundamentals or whatever, is the right way to go about things at the moment. So what we're looking at now is Bitcoin forming some bullish divergence. That's right, we're going to do a little bit of TA now after that lecture. But I just wanted to put things into context for you. Bitcoin, crypto goes sideways for the most part. Last time it was in a range of roughly around 100% range. We'll forget about the absolute peaks of the last cycle. So we started the bull market down here, below 4,000. We peaked at 14,000. But for the most part, we were talking about a sideways range of like 6,000 to 12,000. That's what the general accumulation range for the most part was. 100% range. I've been saying for a couple of months, maybe even more than that, that I expect this accumulation range for Bitcoin to be right between 20,000 and 40,000. Yeah, you could expect a wick higher, you could expect a wick lower. We've been lower than that in the past, you could easily go higher than that in the future, but generally we're going to stay around that range, 40 to 20,000. That's going to be our accumulation range, and that's what we're doing right now. So if we're doing that and we kind of think that in our heads, then yeah, expect you're not going to catch the low, you're probably not going to sell the top, but risk to reward, which in crypto is usually quite big, you've got to have large margins to accept temporary, I suppose, just temporary downsides. Then yeah, now is appropriate. Down here at 24,000-ish areas is appropriate. All the way down to 20,000 is appropriate, and anything lower than that, if you believe what I believe, which is the accumulation around that range, then below 20,000 is an absolute bargain. It's a steal, right? It's got to be done. It's essential. So yeah, we're looking at this on the short-term timeframes now to see what's going on, and we do have some drives of bullish divergence, and it's not just Bitcoin. All altcoins for the most part seem to be having this. Doesn't mean necessarily that it's going to play out, but it does have it, and it is already pronounced, not just on a daily but on a 4-hourly. We are below all major moving averages, so as far as the trending move is concerned, the trend is down, and we should expect further downside. The next major support based on horizontals and a Bollinger Band bottom sits down here at around 24,300 or 400, give or take. If we take it to a weekly, there is only one moving average below us, which doesn't have much relevance, which is your 200 exponential, and that sits currently at 24,600 and trending up. Then there's a 50 simple moving average down here at 24,000, and again trending up quite dramatically. So there is still some support below us, but momentum is still down. It is fading. The downside momentum is fading, given the divergence. That's what it's all about. It might not be enough to pick it up and reverse this chart. But one thing I was looking at is our traditional markets. Oil moving up. That's always been my fear with the idea of inflation, CPI. I'll make another video on that. I've already made a video on that a few weeks ago about my fears of this happening. So it is happening. Dollar moving up. Probably looking for new highs, new local highs that would be. 105, 105.3 to begin with, and see if we get rejection. But interestingly enough, S&P actually moving up. It's getting a rejection on that horizontal. So stock's actually looking okay. That is a decent breakout above all major moving averages with no bearish divergence. Plenty of room to run. So maybe Bloomberg were right after all when they said it's going to reach 5,000. Maybe they were right. Even a broken clock's right twice a day. So yeah, all markets behaving in their own way. And they're not that chaotic, to be honest with you. And crypto is behaving, from what I can see, in exactly the same way that it behaved the last time. And during that last time, I was buying Matic. I was buying, what else was I buying that did a load of, well, obviously I bought like the major classics. I got BNB is a good example. BNB did pretty well. Buying loads of BNB, bot trading BNB. Obviously I had a good stake in Ethereum. I was buying all these low prices. Looking forward to what we all kind of understood as 2021 going to be yielding the big parabolic run, which it did. Right? Similar to the previous bull market, which had a big parabolic peak, 100x. sold. So rinse and repeat. This market cycle looks very much like the last one, and I would imagine that there's going to be plenty of money fall into the laps of crypto over the next couple of years. But until that, the liquidity is low, the demand is quite low, the retail sentiment is low. These are all good things for people like you and me. I don't like the term that much, but smart money versus dumb money. This is kind of where smart money allocates itself, recognizing that their risk to reward is really good, but that doesn't mean that they're not going to sustain a 10, 20, 30 or even 50% further downside from today's prices. So there's absolutely nothing wrong with allocating a position today in Bitcoin or certain altcoins, for instance, but you've got to recognize that that's not likely to be the bottom. Just because you buy it doesn't mean that you should expect it to be the bottom. Nobody does that. Hardly anyone buys the absolute low. It can happen a few times, and but it doesn't necessarily happen every time. It hardly ever happens. But yeah, allocating positions at this point and lower is the right thing to do, which is why we're talking, and we have been talking on the live streams about dollar cost averaging into altcoins and Bitcoin and working out certain increments of where to do that from. And I expect that the closer we get to 20,000, the closer we get to the absolute bottom. We might not even get to 20,000, right? It might not happen. We might wick lower than 20,000. It might happen. Doesn't really matter. Risk to reward is incredibly good at today's prices and lower. And this is something we've always got to work out, right? If you're investing, for the most part, you're just putting money in constantly. Your pension is a good example. If you've got a workplace pension, every month on payday gets allocated. Okay, why is payday the best day to allocate positions? Am I catching a low there? No, you're not catching a low on your payday. Why would you? Your funds are being allocated to a chart or an index fund or an ETF or a variety of different stocks on that day because in the future, it's expected to be higher. So this is what we should be thinking here. The only difference is that we have the facility and a little bit of knowledge to try and dollar cost average into areas that we speculate bottoms to be on, rather than just doing it on payday. So that's the difference, which makes it better. All right, makes it better. So that's what you got to think about: the risk to reward and the time frame. Time frame being about 2 years, roughly 2 years from now, before a new high is formed on Bitcoin and some of these major altcoins and plenty of shit coins too, where we sell from. But right now, the smart money is allocated at these levels and lower because the risk to reward is really good. It's extremely good. But most people will watch this video or look at the downside and go, oh, no. But that's not how you should be looking at it. You should be looking at this and going, yes, the lower I go, the lower the prices, the more I allocate, the better it will be in the future. Anyway, I think put it to you like that. Again, the bullish divergence doesn't really mean a great deal. In the short term, I still expect further downside, and we can still complete the bullish divergence on this daily anyway. Most altcoins have this, and there's loads of them that have this. So rather than me just talking about the TA, which again is as simple as saying the trend is down, but the divergence is present, which means that a little bit further downside before a potential reversal is on the cards. It could easily happen. It's better to try and put it into perspective and say, buy while it's low. The lower it goes, the more opportunity you have to keep buying. And just like the cycle before and the one before that, the smart money is allocated in the boring portion of the market, which is what it is now. Boring, sideways. 20,000 to 40,000, allocate as much as you can. Sit back and wait. When you break 40,000, forget it. Don't bother allocating anymore. Sit back and let your money do the work at that stage, and then you sell. Obviously, your next door neighbour and your friend's best friend will come to you and say, "Where can I buy? I can see that we've broken 40,000," and you'll say, "Don't buy it now. You should have bought in 2023. You could have even bought in 2024." But you don't buy in 2025. And that's what we're looking at right now. So I'll sit back. That's all I've got to say about it. There's nothing much more to say than that. Anyway, I hope you have a nice weekend. Take it easy. And I'll see you next time.